My name is Manuel and I'll be your coach. Today's episode, I'm talking about point of interest. We're going to be talking about a very important term when it comes to market structure mapping called point of interest. Point of interest, there are different points of interest when it comes to the Forex market. Basically, a point of interest is like where we are looking to buy or sell in the market. It's basically where we are looking to buy or sell in the market. So, for this particular video, I'm going to be teaching order blocks. For them, order blocks. Now, there are other types of points of interest. We have indecision block, we have breakout block, we have fair value gaps. But for this particular video, I'm going to be talking about order blocks. So the question is, what's an order block? Well, let's just say an order block is a zone or point of interest, a zone where we are looking to buy or we are looking to sell the market. It is, we cannot just sell from any zone in the market. There is a particular zone that we expect price to come down to or to come up to for us to sell or buy. And the particular zone I'm going to be talking about today is going to be order blocks. Now, when it comes to order blocks, there are two types of order blocks. There are the bullish and the bearish order block. You have the bullish and the bearish order block. Now, for the bullish order block, it has two names you can call it. Either you call it demand zone or you call it support zone. Then for the bearish order block, either you call it supply zone or you call it the resistance zone. So for bullish, you can either call it a buy POI or a demand order block or a supply or a support order block. Then for the sell, you can either call it a sell POI or a supply order block or a resistance order block. Now, this is how an order block looks like. Now, for a bullish trend, basically market creating series of higher highs and higher lows, and higher highs and higher lows. Now, in this market now, you can see that price has taken an inducement, right? As that price has taken an inducement, so the next thing we expect price to do is to action a POI on our buy POI because the market is creating series of higher highs. The market is creating series of higher highs and higher lows. So we expect that price will come into a buy POI and tap us in and activate our buy orders. Now, and I told you that, I remember teaching you guys last time that order blocks are found directly above the higher low for an uptrend, and then for a downtrend, they are found directly below the lower high. So for an uptrend, directly above the higher low, and for a downtrend, directly below the lower high. So what we expect price to be that price will take out the inducement, come down to a point of interest for an uptrend, a demand or a support zone, for a downtrend, a supply or a resistance zone, and then price will now take our orders from there and keep buying or keep selling for a downtrend. Now, when we place, there's two tools here. We call it the long position and the short position. The long position is for buys. The long position is like this. It's like this. The long position is like this. So now the long position is for buys and the short position is for sales. Notice that's how I changed my candle. It's how I changed my my buy and sell candle. But normally some persons theirs are always like this. You have red here. The long position is for the buy, and then the short position is for the sell. The long position is for the buy, and the short position is for the sell. I customized my buy and sell positions the way I want. So now what we do is that we place our buy position directly above the POI. This is above, this is the topest part of the POI, and this is the lowest part of the POI. The lowest part of the POI. As you can see, what we do is that we take our buy position and we place it directly on top of the POI, of the buy POI. And then our SL, let me move this candle. What we do is that we place our entry directly on top of the buy POI, and then our SL should not be below the buy, not be at the bottom of the buy POI. Our SL should be directly slightly below it. That's what we call giving it space. So the SL, our SL will be directly slightly below the higher low. That's here. Since this is the higher low, since this is the POI, this is the lowest part of the POI, our SL will be slightly below it. You're going to give space, room to breathe. In case price comes down to that place, it will not take us out. And then our target will be the next high. The price is supposed to be structure. This is a 1:4 fixed reward ratio. I'm going to show you what I mean by 1:4. Now, if you look at this page, you can see 4.67. What it means is that 4.67. Now, if you look at this page, you can see 4.67. It means if you're risking $100, you're making $400 as you multiply the 100 by 4.67. Then you're risking $50 multiplied by 4.67. It will tell you how much you're making. You can see the value, right? Then now there is something I want you to take note of. Why in this page? There are three things you take note of. Take note of the entry price. Take note of the entry price. Take note of the SL price. And take note of the take profit. Take profit in brackets TP price. Now these three things is what we take note of. Now remember I told you that the SL, this is your SL, this is SL. You see stop, see a stop, this is SL. So we don't place it directly on this sell demand, on this buy zone, this demand zone. We give it a little bit of space. We take a little bit of space. Now once we create a little bit of space below it, now this is our entry. This thing I'm doing here, this place is our entry. So we place our entry directly above this POI, like on the tip of the buy POI. And then this now is our take profit TP. We now target, that's our take profit, our target. We're not targeting this high here. Now this is a 4.28. Means if you're risking $100, you're making 400. You're risking 50, you're making 5 times 4, $228. So now notice something. At the right hand side of this my chart, you can see three values here. It's called, this particular value you're seeing here now is linked. Notice is linked to the entry price. So it's linked to the entry price. Then the one below is linked to the SL price. The one below is linked to the SL price. Can you see? Then the one above now is linked to the take profit price. The one above is linked to the take profit price. So this is literally what we are trying to say here is that these values you're seeing, this particular one, once you trace it, this particular one up here, you can see 1.30188. This is your entry. Then the one below, you can see 1.29907. This is your XL price. Then the one above, you can see 1.31390. So we take note of the price. So this is actually what you're going to use to place your entry. Take note of the price. Entry price is 1.31390. The SL price is, and the SL price I told you is the lowest one. So this one, 1.22997. Then the take profit is your TP, which is this price here. You can see 1.31390. So take profit is 1.39310. 1.3931 1.31390, 1.31390, 390. So this is how you then know that okay, price should come down. See this arrow now? This arrow is price coming down. This is when you should not know that price should come down to this entry here. And then once price comes down to this your entry, value, it means your trade has been triggered, has been activated. Then once price now hits your take profit, it means it hits TP, and your trade activated and then went to your direction. But if price takes you out here, it means you're taking a loss. It means taking a loss. Okay, Vianney, I can see you're in the entry price. There are three prices that you can see here. At this right hand side, you can see one is blue on top. Then you can see the second one, 1.30188. And then you can see the third one, 1.29907. Now, what this thing is trying to tell you is that the first one is your TP, take profit. The second one is your entry, and then the third one is your SL. Why? Because this, if you trace this your TP, now. If you trace the value of this your TP, you see that the value still aligns with that one that is up. Let me adjust this. Now what is going to reduce? You see, it's reducing, and this is where it is now. It is here because your TP now is there. If you increase this TP and go up, see where it is now. It's now up. Now for the entry, if I increase this entry here, you see, can you see the middle one just increased? The middle one increased. Now if I reduce it here, you see, it just reduce. Now if I bring it down here, see, it just comes down here. Now for the SL, if I increase the SL below, you see where it is now. It's not very far. To know your take profit, your entry, and your SL price, you have to move this your position, this your long position and short position too. The long position and short position too will tell you exactly where your SL price is. So we know that directly below here should be our SL price, and then when we check that line, those numbers by the right, we see a value there. And then we know that on this part now, the entry, there should be a value there. And then when we check those lines, those numbers, we see a value there. And then same thing with our TP, because our TP is always far. Once we check the value on the TP, we see the same thing by the right, 1.31388. This now is our long position. This too is our long position. Now we are going to come at the tip of the POI and tap on it. And once we tap the tip of the POI, we see 3 points. This point, and this point. The first point is our take profit. The second point is our entry. And the third point is our SL. We take profit, entry, and SL. Now I told you always leave space below the POI for the demand zone to breathe, for price to breathe when price comes into your POI. Because sometimes price can just come, do this thing, tap here, and then go to your direction. If your POI was here, you see price will take you out. We have to leave room for it to breathe. So now, what I'm trying to tell you is that this particular buy position now, it has an entry, a take profit, and an SL. So now we now look for values here. The values, we are not going to look for the values of our entry, the values of our SL, and the values of our take profits. And these 3 values is now actually what we are working with. These 3 values is what we are working with. Our entry, our SL, and our take profits. Our entry, our SL, and our take profit is what we are working with. Now, for the sell position, same thing applies for the sell. Now, what we do is we pick our sell position 2, and then we come to the tip of the sell POI, of the sell order block, and we place our entry there. Now, we place our entry there, we are still going to see 3 marks. We are still going to see 3 points. We are still going to see 3 points. We are going to see our entry. We are going to see our SL. And we are going to see our take profit. And if I adjust the take profit to this zone, we are still going to see 3 values by the right. Now this value now, like I told you, the last one is always for the sell. Now this is inverse, like as if you inverted it, an inverse. So the SL, see the SL, this is the SL. This is the entry, this is the entry, this one is the entry, and then this one is the take profit. Just understand that the entry is the one you will see after the take profit. Based on the sell, this is now for the buy, take profit, the one you are seeing below is the entry, then the SL. For the sell, after the take profit, the one you also seeing below is the entry, then the SL. That is how you know your TP value, your entry value, and then your SL value. I don't know if you get. So that is how you know those things. Now, POIs, point of other blocks are not just demand or supply zones. Other blocks are candle formations. There are candle formations that form these other blocks, and for us to ensure that these other blocks are valid, we have to see those candle formations. If those candle formations don't happen, then that other block is not actually a very high probability other block. Now below here there are candles that form other blocks, and I have 3 types that I make use of all the time and I like to see. First one is engulfing. We have the bullish engulfing and we have the bearish engulfing. Now what is the bullish engulfing? The bullish engulfing is simply a buy candle engulfing a sell candle. Understand something? I told you that these POIs are found directly above the higher low. So directly above the higher low, I want to see this candle, I want to see this formation happen around this zone. Let me mark it out. I want to see this formation happen around this zone. Around this zone now, I want to see this formation here. And what do I want to see? I want to see a long candle. They call this the mother candle and they call this the baby candle. The mother candle has to engulf. When we say engulf, it means it covered the whole baby candle. Covered the whole baby candle. Covered the whole baby candle. That's what we mean by engulf. Engulfing candle means the mother candle covered the whole baby candle. So this is the mother candle. This is the baby candle. Now, the color of the candle is not important. The color does not matter. The most important thing is that the second candle engulfs the first candle. That is why you now call it bullish engulfing. Now, for you to confirm that it is bullish engulfing, this candle that engulfed this other candle must do what? The wick of this candle must sweep. The wick of the mother candle must sweep the wick of the baby candle. The wick of the mother candle must sweep the wick of the baby candle. The wick of the mother candle must sweep the wick of the baby candle. And can you see? He swept it. So not only the body sweep this one, the wick also swept it. Then we know that this is bullish engulfing. And the question is, where then is our POI? How do we then map our POI once we see this kind of formation? And we map our POI from the body of the baby candle, from the body of the baby candle. Maybe not stop back. From the body of the baby candle, you see, from the body of the baby candle, the wick of the baby candle becomes our buy POI. Now, this demand zone you're seeing here is literally this thing. Now, based on this is live, this is how you're going to see it in a candlestick. Once I see this formation, automatically I expect price to come down, tap me in, and go to my direction. Just like price did there, to come down, tap you in, and go to your direction. That is for bullish engulfing. Then for bearish engulfing, the same thing happens. This one now is for downtrend. Bullish engulfing is for an uptrend. Bearish engulfing is for a downtrend. Now for bearish engulfing, it means that this supply or resistance zone is not just a block, it's a candle formation. It's a candle formation. So it means that for bearish engulfing, I want to see a sell candle. The color of the candle does not matter, but I want to see one candle. Bearish engulfing, I said that I want to see a bearish candle. It must not necessarily be a bearish candle, it can also be a bullish candle. The color of the candle is not important, but for the bearish candle, directly below the lower high, I want to see directly below the lower high, this region, we want to see this candle formation. And this candle formation is a candle engulfing the previous candle for a sell. Now you see this candle engulfs this candle, and then next thing I want to see is I want to see that the wick of this candle, swept the wick of the mother candle swept the wick of the baby candle. Once I see this candle formation, the next question I'm going to ask myself is, where is the POI coming from? Where is the POI starting from? POI this stuff is hanging, here is the POI starting from. So the POI now, my POI now will be from this candle, from the body of the baby candle, the body of the baby candle to the wick of the baby candle, then becomes my point of interest, becomes my POI, and then this automatically is my bearish engulfing. So I expect price to come down to that position and then sell. So where do I place my sell limit? I place my sell limit directly on top of this. Place my sell limit directly on top of this sell POI, and then my SL directly below it. Now I told you have to create room. We don't put it like this. We have to create a little bit of space. Then I'll not target my take profits. So I expect price. Let price then come back to the POI, tap me in, and sell my take profits. This is what I want to look for as the candle formation for my POIs. So once you see this thing, take it. It is very, 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 very short layout. So very, very short layout. Now the next one is morning and evening star candle. Morning and evening star candle. Now the morning star and the evening star, they look kind of like the same, but they are not the same. For the morning and evening star, they look the same, but they are not the same. I'm busy, so for the morning and evening star, they look kind of like the same, but they are not the same. The morning star, first of all, we see the source candle. We call this candle now the source candle. Morning star, we call this candle, the first candle becomes the source candle. This is the source candle. Then this is the baby candle. So you can also call this, but for me I call it 1, 2, 3 pattern. Call it 1, 2, 3 pattern, 1, 2, 3 candlestick pattern. But the name is morning star. But I want to see this pattern form. Means the first candle. To see the first candle engulf. To see the first candle engulf both the second and the third candle. Now, let me explain well for you to understand. So what I want to see is this third candle engulfs this small candle. This third candle engulfs this small candle. This week, not take out this further low. This week should be just like this. It should not be below here. Don't see this candle engulf this candle. This morning star is this third candle will engulf this second candle, and then this first one will engulf this other two. So I want to see this candle formation. Once I see this candle formation, this is called morning star. Automatically, this small one, the wick has to sweep this first one. The second candle, the wick of the second candle has to sweep the wick of the first candle, because the second candle has to sweep the wick of the first candle, and then the third candle now closes above of it. But then this third candle closing above of this second candle, it will not still close above of this first one. So once I see this candle formation, automatically where becomes my POI? My POI automatically becomes the second candle. The whole of the second candle. The whole second candle becomes my POI. So my POI becomes the whole second candle. So I expect price to come down to it and buy. For the bearish engulfing, like I said, I want to see the bearish candle engulf. I want to see a sell candle engulf a buy candle, or the color does not matter. I just want to see one candle engulf the other candle. I just want to see one candle engulf the other candle, and then this becomes my POI. So moving on to the next one, that's the moving on to the next one. Moving on to the next one, that's the morning and the evening star. Moving on to the morning and the evening star. Now, like I said, the morning star is, I want to see 1, 2, 3 candle. The second candle has to sweep the low of the first candle. The third candle has to engulf the second candle. But then the first candle, the second candle must not engulf this first candle. It must not engulf the first candle. Then this is a morning star. And then for the sell, same thing happens here. 1, 2, 3. I want to see what happens here. 1, 2, 3. 1, 2, 3. I want to see the second candle sweep the low of the first candle. I want to see the second candle sweep the low of the first candle. This is the second candle. I want to see sweep the low of this candle, and then the next candle has to engulf the second candle. And then why still not engulfing the first candle? Why still not engulfing the first candle? This is a pattern I want to see directly below my lower high. Directly below my lower high, and then this is a pattern I want to see for the buy directly above my higher low. That is making it morning star. Then this is evening star. Morning star. Then this is evening star. So now, next thing I want to see now is the next type of candle I look for, and I make use of this one all the time. This is called a piercing buy pattern and a piercing sell pattern. A piercing buy pattern and a piercing sell pattern. Now, a piercing buy pattern is the reverse, the opposite of this, which means that I want to see the second candle sweep the low of the first candle. I want to see the second candle sweep the low of the first candle. The second candle sweep the low of the first candle. Then okay, so for the evening star, I was saying that the same thing happens in the morning star. I want to see the second candle sweep the low of the first candle, and then I want to see the third candle engulf the second candle and not engulf the first candle. Automatically my POI then becomes the whole body and wick of the second candle. The whole body and wick of the second candle, which I expect price to tap and then sell. So now, moving on to the third type of candle I like to see. They are called piercing pattern. Piercing pattern. Now, the piercing pattern for the buy is the same thing as the morning star, but the only difference is that the third candle engulfs both the second and the first candle. The third candle, as this one, engulfs both the second and the first candle. I told you guys that the color is not important. The color of the candle is not important. I just want to see this pattern form. And now you see the second candle swept the low, the wick of the first candle, and then the third candle engulfed both the second candle and the first candle. And this is called a piercing buy pattern. It's called a piercing buy pattern. So where becomes my POI? My POI automatically becomes just the body just the body of the first candle, just the body of the first candle. Can you see? Just the body, the whole body, just the body of the first candle, just the body becomes my POI. So I expect price to come down, tap me in, and boom, and sell. So if I want and buy, so if I want to buy, I'm placing my buy order directly at the tip, place my SL directly below it. Remember, I told you guys that we have to leave room for space. Market can decide to come down here and come down here like this, and then now go to our direction. So if your SL was directly here, you see market will take you out. So you have to leave space, not too much space, not little space, but moderate space, and then target the next high, and then you see market will come there, tap you in, and then go to your direction. So then for the sell piercing pattern, same thing, just as the evening star, but the only difference is that the third candle now engulfs both the second and the first candle. Remember, I told you that the second candle has to sweep the low of the first candle. It has to sweep the low of the first candle. It has to take out the first candle, and then has to take out the first candle. Then the third candle now has to engulf both the second and the first candle. So here becomes my POI. My POI automatically becomes just the body of the first candle. Now you see, just the body of the first candle for my sell. Normally, I like to make my sell red. I like to give my sell the color red so that it will differentiate my buy from my sell. I like to give it color red, differentiate, so I know that price is selling. There's something it does to the psychology. I like to differentiate it, so I know that okay, price is selling, so this is sell and this is buy. So literally this is what I look for. So if I have a demand zone directly above my higher low or directly below my lower high, it is not just a block that was drawn, it is a candle formation. Not just a block that was drawn, it is a candle formation. And these are the three most important candle formations that there is. We have the bullish engulfing, the bearish engulfing, we have the morning star and the evening star, and then we have the piercing buy pattern and we have the piercing sell pattern. Now, but there are two criteria I want you to take note of. There are two criteria I want you to take note of in order to ensure that these patterns are actually very, very valid, and that the POI is a high probability POI. What are the patterns I want you to look for? Number one, that's the criteria. Number one, it must align with trend. This pattern for the buy must form in alliance with trend. It must form in alliance with the trend. So if price is going on an uptrend and is creating series of higher highs and higher lows, there is no reason why you should be looking for sell order blocks pattern. There's no reason why you should be looking for sell order blocks. You should only be looking for buy pattern, buy order block patterns. And once you see any of these buy patterns, just take your POI, market will come there, respect it, and go to your direction. And then the second criteria to further validate that these order blocks are actually very, very valid. The second criteria is a fair value gap. There's something called a fair value gap. Now, what is a fair value gap? A fair value gap is a space in between three candles. Fair value gap is a space in between three candles. Let's just say you have I know I sent videos of fair value gaps to you all. Let's just say you have let's say you have this and this, and the fair value gap is just space. This is a space in the first candle and the third candle. The space between the first candle and third candle, space between the first candle and the third candle. That's called a fair value gap. Fair value gap is the space between the first candle and the third candle. This is the first candle, this is the second candle, this is the third candle. Now, the wick of this candle and the wick of this third candle, there is a space, there is a gap. There is a space, there is a gap, and this gap that you can see here is called a fair value gap. A fair value gap means one thing price likes is fair value gap. Price does not like leaving fair value gaps, but once price leave a fair value gap, price will seek to come back and collect those fair value gaps, take out those fair value gaps. So in alignment with these POIs, what I want to see, let me copy this. In alignment with this POI, what I want to see is, I want to see in alignment with these POIs, what I want to see is, I want to see this. I want to see another buy candle. I want to see another buy candle. I'll show you. I want to see another buy candle. I want to see another buy candle. Then what does it mean? There is a fair value gap. And where is the fair value gap? The fair value gap is between this candle, the tip of this candle, and the tip of the third candle. This is a gap. This is a space. It's called a fair value gap. Why did I call this the first candle? Because this wick swept this wick. So this, I know this is kind of like a retracement move. Other blocks are mainly found in retracement moves. Can you see? Other blocks are mainly found in retracement moves. There's also an other block here. But the reason why it did not respect this one is because this is the inducement it's supposed to take out. And as it took out the inducement, tapped on the POI and boom, went in the direction. So this is a fair value gap. Why? Because there is a space between the first candle, the candle that swept liquidity, and the third candle. Once you see a space between the first candle and the third candle, just know that price will definitely come back and take out that space. Come back and take out that space, and then keep going. And now once your POI aligns with this fair value gap, automatically you're actually in a good, you're actually in a good position, because price will come back and tap you in, close the fair value gap, and go straight to your take profit. Likewise every other pattern. So you can see a fair value gap from here to here. You can see two more candles create here, and then a fair value gap. So once there is a fair value gap above your buy POI, it validates that other block. Once there's a fair value gap above your buy POI, it validates that other block. And once there is a fair value gap, below your buy order block, below your sell order block, it validates that sell POI. The more it validates that sell POI, it tells you that price will definitely respect that POI. It gives us more confirmation that the POI is very, very valid and strong. Why? Because there is a fair value gap. And price seeks to take out fair value gap. So once we see a fair value gap align with our order block, automatically we should have the confidence, more confidence in taking that trade, because it's going to play out as planned. Why? Because price aligns with it, the POI aligns with a fair value gap above of it or below it, and you're going to see price come, tap on this and then sell. So I'm going to be taking you in the next link I'm going to be sending. It's going to be, we're going to be looking at all this thing in a chart. We're going to be looking at all this in a chart before the forex market opens around 10. I'm going to be using 10 minutes to look at all this in a chart. But let me just show you one that I spotted here. Can you see this one now? Is, I know the direction of the market. I know that GBP USD is selling. So now, and this is our change of character. This is our change of character. I told you after a change of character, I expect price to take out an inducement. You see, so price retraced, making this an inducement. Then from making this an inducement, from making this low an inducement, making this place an inducement, price did what? Price transferred the inducement from this level. Price transferred the inducement from this level. Price transferred the inducement from that level to this level. So this becomes our valid and new inducement. And then confirming the POI that was created. The POI that was created, like I told you, I want to see a pattern, but there's no pattern here. There's no valid pattern here. There's no valid pattern here. So what I had to do was go down to the 30 minutes, and in the 30 minutes I saw a pattern that I wanted the market to give me.